In our next panel discussion, we'll examine the current state and the future potential of transformative systems like Aadhaar and UPI, and the impact on consumer experiences and business transformations. This discussion will also cover the crucial role of regulators in striking a balance between fostering innovation and ensuring stability within the digital ecosystem. Lastly, we will delve into the long-term viability and scalability of these digital infrastructures, setting the stage for a future-ready BFSI sector. Ladies and gentlemen, for the panel discussion, Catching the Wave, Realigning Business Models to Dynamic Digital Public Infrastructure, let's call on stage our panelists, Mr. Mahesh Ramamurthy, Chief Information Officer, Yes Bank. Let's have a huge round of applause. Mr. Kashinath Hariharan, Head Strategy, Geo Financial Services. Anjani Rathod, Chief Digital Officer, HDFC Bank. Sameer Singh Jaini, Founder and CEO, Digital Fifth, will be moderating the session. Let's give a huge round of applause for them, please. Thank you.
Thank you. Thank you. I'm audible? I guess, yeah? Okay, don't think that I get to meet these gentlemen on a regular basis. Okay, don't look at it like that. It's not easy. I think all of them are some of the most critical guys in the ecosystem. And I think I take appointments with them as well, right? So don't worry about it saying that I have special access, not like that. But I think they're kind enough to accept the request. And I think it is for us to ensure that this time is really well optimized and used. What I will also do is that, given that intensity of these sessions, you have deep questions coming up. I'm very, very happy to see all of you there. We'll ensure that last maybe 10 minutes will be left for the questions from the group as well, right? So that's the intent. Now, I think DPI has been spoken about. Pehle India Stack tha. Fir sab karte we moved to DPI. Basically, the logic I am looking at is that the ecosystem or the government or some of these entities are building faster than how any in the fintech also can sort of catch up. So on one side, you look at ONDC, then you suddenly see there's OKIN coming up, and then we hear that there's a logistics stack, education stack, and then health stack coming up. Now it is continuous, right? And for anybody to build it continuously for that segment is not easy, right? There is some failures here and there. It's not going to be, for example, the government is also acting like a startup, so they'll make some mistakes here and there. So many times we think that overnight success ho jayega. UPI ka success overnight nahi tha. It took its own sweet time. I think we were building from 2015, but you saw maybe in 2017, 18 it came up, right? So it does take a lot of time. I'm seeing ONDC doing well. It'll take its own sweet time. So many of you will say the delivery mein thoda der hua tha, but it'll happen for some time, but we'll graduate. So I think it will be humongous impact to the market, right? So now in that context, when the markets are changing, and anybody and everybody can only grow with the usage. I mean, I don't know which bank will think of not using Aadhaar for KYC. That's not possible. Which bank will say, "Yaar, payment ke liye will not use UPI." Not possible. Onboarding journeys are so simple right now. Anybody can open a savings account, build up for that within maybe months. Tech is no longer that difficult now because of that framework, right? So I think in this context, maybe I want to take a quick 1 minute or 2 minutes bite from each one of you, your visualization, your thoughts on DPI and how banks are adjusting and your own personal experience there before we go into deeper questions. Maybe Mahesh, we'll start with you.
Yeah, I think when you look at the DPI, you rightly said.
Is he audible?
Yeah, I think it should be. Give more voice back. So I think overall, obviously we've, kudos to the overall government ecosystem, the way we've envisaged the whole DPI and the evolution that it has taken place over the last half a decade. I would say half a decade because the half a decade has seen how they have very well asked for the fintech and the world to be able to merge with it and accept it and start to force an adoption, I would say. And then once you start the early adoption, the ease of how you take it into your own ecosystem and mainstream business is what we are seeing now, some of the advantages. So to me, I think when you look at a bank, to keep it short, as a financial service institution, using some of the DPIs is, I would say, default expectations. To be able to possibly look at it from how you can meet the right levels of compliance and experience is the next part. because obviously there are compliances also coming in, evolving, changing, and probably rapidly changing many a times. And the experience layers that you start to provide, because you can't always have a reach. So how do you do it? Using the DPI infrastructure and the intelligence that it will start to provide. I think these are areas that will grow over time. So simple short answer this, yes, adoption, integration into it, into our ecosystem is mandatory, and we have started doing it. Using the intelligence layer next on top of what we have is going to be the next layer for any financial institution to build on it.
Thank you. Thank you, Mahesh. Kashi, quick 2 minutes bites on that.
Yeah, so I think, the DPI layer, as it is evolving, I think we've had a 10, 15-year journey. It started from the Aadhaar and now, as you said, logistics. So multiple aspects of the digital public infrastructure are coming into shape. And banks, financial institutions, and healthcare providers or educators have this opportunity to really carve out journeys for life, if I may say. Because see, we've been very narrow in our worldview. Say, if I'm a bank, I will talk about a banking journey. If I'm a NBFC, I'll talk about NBFC journey. If I'm an educator, I'll talk about that education journey. But you see, I as an individual or any one of us here in the room, we all live and, we have various objectives and purposes in life. So I think the DPI layer essentially will transcend us from thinking fintech or regtech to life tech, because it touches pretty much all aspects of life, and it's for the ecosystem here, the innovators, to kind of stitch journeys which transcends beyond just, see, because fintech, I mean, if you see banking is, or a financial service is not an end goal. It's not that, hey, look, I went and purchased a TV and I brag about it to my friend. I mean, nobody brags about that, I went to a bank and did X, Y, Z generally. So it's a means to an end. So the whole challenge is about how do we use this whole infrastructure to stitch journeys which transcend across multiple industries, verticals, and to be able to come out with one, face to the customer. It's a very big problem. I don't think anybody can solve it. But essentially, the way to imagine DPI is how it can enable life.
Okay. Deep thoughts, okay. Philosophical ho gaya. So Anjani, quick thoughts from your perspective before we proceed.
So just as in the physical world, we see rails, ports, roads coming up, the DPI, which is the public infrastructure for the digital world that's getting created, is helping us do a lot of innovation in the digital world. It allows even a small startup to come and initiate a program that impacts a large part of the population. Those enablements are happening because of DPI. And not just us as a bank, but almost all the players in financial services are leveraging this capability in a very strong way. It essentially helps us in 3 different ways, as we are seeing today. One, the customer experience is improving significantly. What we can provide to our customers, a few click or a few tap experience with DPI, that was not possible before that. The other thing is, for the organization also, a lot of processes at the back end become much simpler. Because there is DPI, this can be leveraged and make things simple. And as we adopt this in a big way, with scale, we'll also see optimization on the cost side coming for this. As a result, we will see that financial inclusion can be extended a lot more at smaller ticket sizes, for people who are, hinterlands of India who are living there. These things can reach there. So DPI that way is a very big enabler, and I think we are blessed to be living in times when DPI is coming up.
I remember when RTGS came first time, I think 2004 or somewhere, we were there in Kotak together and we were trying to figure this out. From there to here, I think countries dramatically changed, right? But maybe I'll take it, Mahesh, slightly specific, because from a tech perspective, it is actually difficult to catch up. One, dependencies are different, very solid. Account opening stops when the Aadhaar is not there. There's no alternative to that framework easily to produce that out. Journeys are not easy. And then ONDC comes and all of that. So how do you think that tech can sort of scale up to that environment? Because everything is changing and something you have to do, CBDC will come, something more. So how do you build that tech stack and how do you ensure that run the show, change the show, and then the DPI in between? How do you exist and how do you cater to all segments, right? I mean, the other thing is customers are coming from partners. Customers are coming through your digital channels and they're coming directly from your own branches. So, कहाँ करेंगे काम?
See, Samir, I think today DPI is a public, if you look at it today, no, there are certain which are essentially capabilities, DPI capabilities, which are your own data, right? And there is a common infrastructure that enables us to access it. Other is your information that is getting accessed. Same way DigiLocker and all of these, right? Or if you see account aggregation. Now, to your point, what happens is as institutions begin to see the value behind it to scale, to use them to deliver either instant gratification, if I may to say that, or to enable their own journeys being far better from an experience perspective, or in terms of using the data more effectively to provide credit lines or whatever. I think it's very important for technologists to really see how you can do a fail-safe journey. You can't do much if, so obviously if you look at today, the central infrastructure in itself is also going through a lot of overhaul. It's not that they are static. Today every infrastructure that is sitting there, they are also learning, they're also building scales, they're also building, so what possibly you saw as an outage 6 months, 2 years from prior has started to come down. Yes, there are. But at the end of the day, these are learnings that one will always have in the journeys. To be able to build alternate paths, to be able to build alternate capabilities is very, very critical for a digital world. Now, for example, if like we say, in the start, we built, the British built railroads. We probably sat on it for long. And now we are seeing that we have to build an alternate path to be able to get there. So infrastructure, the roads, everything is getting built. Same way on the digital e-highways, which are our digital DPIs that are being built, need to understand how much of utilization that's going to happen, say 10 years from now, and start building on it. And we as technologists, where we service very specifics, need to know how to consume it and make sure that there are alternate paths to reach that destination. It's never an ending journey in my mind. It's about saying if you fail fast and get it right and move fast. And it applies to both sides, the supplier side of the information as well as the recipient side of the information. I think both. And today, the way the OpenStack and the way that is used across, with the layers, very constructive and very secure layers that are coming in, I think is a commendable effort. It's a commendable effort. I think I would call it, when you look at nations across us and even some of the developed nations, we are far ahead. So I think we should really give ourselves multiple pats on our back for the way things have happened. And we should be very proud of it. Yes, kind of population that we have and the kind of aggressive that we are adopting it, you will have, and that's for us to build across how we scale it out. So I would never say it is an end state, it is always a journey. And the journey will evolve. Whether that evolution will happen in 6 months, 1 year, it's constant. I think we have to learn fast to fail fast and move fast ahead to make it work. That's the way I will put it.
Thank you. Thank you. So, Kashi, I think everybody's eager to see how Geo pans out, and I leave it that thread to you if you want to be open about that. But what kind of use cases are you visualizing around DPIs for Geo, or what do you visualize generically for that? How should be the experience? What are the touch points on which we can improve the customer journeys? Because you can rebuild now or build now, rather rebuild, right? Everybody else has to do rebuilding. So any quick thoughts on that?
Hello. Can you hear me? Yeah. So, actually, Samir, the answer is in your question partially. There is a digital public infrastructure, so it's available to everyone as much it is available to Geo. So that way, that's the beauty of, and Mr. Arvind also alluded to that, is that the rails are so fantastically built that it is player agnostic. So to that extent, I think every organization has depends on the use case they kind of put it to. But having said that, let me kind of in general, I kind of paint a picture of the journey that can get built over my life tech theme, with a small illustrated example. So imagine there's this guy, okay, we'll call him Shyam, and he's living in a tier 2 city. Uh, he's a playful kind of a teenager, taken on to say gaming in a big way. Doesn't focus too much on studies. Parents have modest means, but this guy is very digitally savvy. So he helps his parents with all his setting up UPI. He's the guy on the street who will help his kind of uncles to authenticate on Aadhaar, or Jeevan Praman for his grandfather's pension. He kind of helps them out with that because he's this digitally savvy guy. And of course, he kind of passes his 12th, and he realizes that he's not going to get admission into some marquee college, so gets into a normal, say, a BSc, kind of a seat. And somewhere way down, during his admission process, it's very smooth because the colleges have evaluated him based on the e-locker certificates that his school has already submitted, and he's kind of admitted. And somewhere way down in the middle of his studies, he realizes that he needs to focus on his career. So he searches around and finds this Swayam platform, which is this education portal, where he takes courses on animation, multiple other micro courses, including, say, video game designing and stuff like that. And he takes this course from IIT Guwahati on, a BSc in analytics, and he kind of does this course, and he goes ahead in life, and then applies for a job, gets a call interview, lands in Bangalore. Sorry, big story, but I want to illustrate this point. Lands in Bangalore, doesn't have too much money to take a taxi, so he kind of downloads the Namma Yatra app, which is based on ONDC, reaches his office, and the moment he reaches office, they ask him to open a bank account. In 3-4 clicks, he opens the bank account, and lo and behold, his account is ready. And of course, he's digitally savvy, so he starts spending money. Somewhere, happy journey for 6 months, suddenly he receives a call from his father that, he's sick and he needs him back. He doesn't have all the money to take his flight back home, so he goes around, pushes some buttons and gets a loan as a personal loan, and with that he purchases a ticket. And as he is going to the airport, he realizes, hey, look, I am late on the flight. So he downloads the Digi Yatra app, okay, and then simply breezes past into the airport and flights, goes to his town, takes a bus, reaches to his father. His father looks at him and says, "Beta, tum aa gaye. Shyam, you have arrived." A few weeks back, we had a Ram movement. Now we have the Shyam movement. So this is the use case of DPI, if I may say. See, it straddles. You see, how much have we arrived? I mean, all of us, in our days, when most of us would have some journey like this similar, we could have never imagined the friction taken out in such a fantastic proposition. We would have to stand in queues to put so many things, stand in a bank account. I still remember in my first job, and Samir, we were together, we kind of had to take a triangle token which would tear your pocket to stand in the bank to take out money from your first salary. We've been there. See, this is all cumulative. It builds. One layer builds over the next, over the next, over the next. And then the compounding effect of all of this is so beautiful that, and I kind of agree to Mahesh's point. If you reflect back, we've arrived a lot. And from here on, have we arrived? The answer is no. We have still ways to, much way forward to go. The real innovation now will come on top of many of these layers as new layers also get built, and we'll have to figure out, how do we build journeys from here on and, converge the journeys across multiple industry segments. I think that's really the story of life tech. Yeah?
Thank you. I think from a pure business perspective, I think you've seen DPS getting deployed, and I think you came in an era in this area where you brought a lot of new ideas and thoughts to the banking itself. So, how do you see the customer experience changing? How does the customer behave differently in this current environment? Uh, what are the decent I mean, what are the new needs coming up? I mean, suddenly when UPI outage happens, everything goes for a toss, right? Something happens here and there. So, what do you see envisage is the customer expectation changing, and sort of where does it go from there? From banking perspective, where hum jayenge kidhar? When so much of it's changing, right? So business-wise, process-wise, anything you want to quantify, where will the banking look like? Our view is that 10 years, when everything is digital, then branches will turn into pure operations shops. Actually, the support shop. The way the telecom has, the shops have become largely a support structure. A lot of things will change, right? So it'll be, first I think we were telling that branches should not do operations, so we moved operations to the back office. Then operation back office was automated, and the front office, we realized that if we can do digital stuff, then can the customer do the most data entry, and the back office is fully automated. The branches will be like more sales, but soon it will be more like branches will be purely operations, nothing, purely support and escalation issues. But how does it think? मतलब आपका क्या विचार है कि कहाँ जा रहे हैं हम लोग?
So in financial services at a very simplistic level, we do three things. We onboard a customer, we enable the customer to transact, and we offer all types of services to the customer. Now, as we go more and more digital, leveraging DPI, it is now available to the customer that you can get onboarded at any point of time, not just by coming inside a bank. So a customer can open an account sitting in the comfort of their homes, and the account gets opened instantly over there. You can transact sitting at home, and you can get almost all the services sitting at home. All the friction points which is there in financial services, whether it is in KYC, underwriting, collections, most of those are getting leveraging DPI into the digital world. And as a result, now bank reaches the citizen rather than citizens coming inside a bank branch. But this doesn't mean that branches are of no use for future. Just like customer experience is changing because insights are there. Today's generation wants everything now. They want it where they are. They don't want to go anywhere else, and digital is helping them get to that level. Branches of the future will also move away from transaction orientation to engagement and guidance orientation. It will not be operations. That's again is transaction. So branches will be a place where it becomes like slowly evolves like a community center, where people can go there to understand how to use financial services, how do I grow my money, what can I do if I have something else. So this is a big value add. In the end, growing wealth and ensuring well-being of citizens is the objective of financial services. So that is where it will go to as we go forward, and all transactions will be done immediately and seamlessly, which will happen for everybody over a period of time.
Thank you. Thank you. I think I'll pause now, take some questions from the group
Just
here.
on one other thing, I think we probably missed one thing that is important is while we do all this innovation, we also have a massive, I would say, impact coming soon, where the Data Protection Act, right? And the fact that how you're going to be able to utilize this public information, individual citizens' information through consent. I think we've already started that journey, and it is not an individual, even corporates, right? I think the whole structure will evolve and change very dynamically over the next 1 year. We've already seen, I think all of us in the banking sector have already seen sudden changes in the data that we are seeking on PAN, right? Which is possibly scaring every one of us in terms of how things will change. And it is changing, right? So now, which means someone out there has realized that the way you're going to protect data has to change dramatically, and hence the utilization has to be more consent-based. That is, you have the power as the owner of the data to let it be used, but the user of that, the consumer of that, need to know as to how to use it and use it with a layer of right levels of protection. As a practitioner, I can see the overheads are going to increase, but that's how we have to live it. I saw Arvind talking about compliance. I think that's going to make a dramatic shift to how we are going to be utilizing DPI. And trust me, that's something that we need to be prepared for.
Oh, perfect. Perfect. I think if somebody can help with some mics here. I think I'll go try a couple of questions maybe. Anybody here has any questions? Because I have enough, right? So you have to choose immediately. Anybody? I think you have had enough chances, so we'll come back to you, but anybody else has any questions? Yeah?
Hi, my name is Rohit. I work for a company called Zafin. We are a provider to HDFC Bank as well. So my question is, again, we are talking about a lot of things going online, things becoming digital, right? The whole onboarding journey, the KYC part, all of this becoming digital and becoming much more simplified from a consumer perspective, right? But if you heard recently in the news, right, like they deepfaked a Zoom video call where they actually kind of, all the participants were made up, right? And one of the guys was the only real guy in the Zoom call, right? So from a consumer perspective, that scares me a lot, right? Like because I'm dependent on a bank for all my life savings, right? So having adopted all of this digital infrastructure, where does that leave the bank from a risk perspective, being exposed to fraud, to, to cyber criminals, etc., right? So how do you kind of safeguard all of this digital public infrastructure from the consumers getting ripped off, consumers getting hacked, consumers' accounts getting hacked, etc., right? So how does the bank look at it from a security and safety perspective? I know it's a very broad question, but
No, so this is true. As we go more and more digital, there are speed bumps ahead. It's not going to be very easy for us to just navigate and scale it up all of a sudden. It's going to be a learning for everyone. That is why this step is cautious. It's not that all of a sudden, branches have started becoming engagement centers. It still takes time. Cyber security, frauds in the digital world is today a reality. It's, in fact, if you look at some of the data which is getting published, it's $1 billion industry at this point of time for fraudsters. And we have to find a solution. Otherwise, the trust of the citizens will not be in it. That is why you find things being done more cautiously, and a lot of investment is going into trying to identify and fix these things as well. You see at the national level also, I4C is being set up to navigate through this area. We are seeing that there is a lot of value in collaboration. Today, if you look at it, your mobile phone is the access to the digital world. But there are so many suspected KYC mobile phones available today. And in fact, the Department of Telecom is creating a central database of all 140 crore mobile numbers. And they are running their own logic to identify which are suspected numbers, which could be having incorrect PAN or incorrect Aadhaar. There's a identity issue in some of those. And those data points will be available to all the users at some point of time. Again, it's becoming a national infrastructure, which will have to be used to identify and protect. But we are getting into a zero trust world as we go more and more. It's not about technology getting into zero trust. Earlier we had 10 servers all inside, our bank. One server used to trust the other server. There was no validation. But now servers are residing anywhere in the internet. You're talking to each other. So it's a zero trust world. You will have to first verify that that's an authentic person or a server or an entity, and then start transacting. We will see more and more of that coming up. So there will be verification of every entity who comes in, and for every transaction there will be verification. But these problems are solvable. As technology is evolving, we are seeing a lot of new things come up, which is giving us comfort that we are moving with the right speed, and most importantly, it's the safe speed to move forward.
I think just to add to what you're saying, what Anjani was saying, I think you also look at it from a regulator perspective. Even the regulators today recognize the fact that technology and going digital has created an increased risk. And towards that, if you see at a transaction level, their ask has significantly changed. One can't see it as an overhead. One can see it more as how do you evolve your risk practices very differently. What you probably used to practice 7, 8 years ago no longer holds true. So there is a lot more inline risk management that is expected. Now that spans right from an onboarding to a transaction that you're doing, correct? Not doing it can invoke a probable penalty for you, right? There is quite a bit. So today if you go and ask a regulator, and kudos to them, they are saying that their biggest focus is tech and risk and governance, 3 areas. And these are highly interrelated because the increasing digital and digitization creates its own set of speed bumps, as Anjali was saying, which needs to be over-managed and proactive. Cannot be... Yes, you will obviously have some new technologies that are going to challenge you, but to try and not adapt to it faster is your own unbundling. That's the way I would put it.
More questions, please? Yeah, please go ahead.
Hi, my name is Akshar and I'm the founder of a company called Fixera. My question is that y'all are from very large financial institutions, and now the digital public infrastructure is such that it's also trying to somewhere create a level playing field. For example, account aggregator comes into picture, and the data that maybe only large financial institutions had of many customer base may be shared with FIUs, which are much smaller entities. Does that, from a business model perspective, also, how do you all look at it as a risk or a threat that now there will be smaller organizations or smaller institutions also where the customer may be getting a better experience, and as FIPs, maybe you would have to share those data points, and will there be an investment into being a good FIP in the account aggregator system and putting that data out?
So I think it's a pertinent question, but I think as both Mahesh and my Anjani kind of alluded to, see, this chore police game is a favorite game since generations. It will continue, and most movies are made on that theme. So this fight will continuously keep evolving, and banks and financial institutions ably, I would say, guided and I would say bordered with regulatory, I would say, measures, will ensure that at the time of coming in itself, a lot of filtering happens. And a lot of people would consider that from outside the banking system as these are unfriendly practices and stuff like that. But you can look at them as brakes. But I would argue it and say that in the first place, brakes came into cars not to stop the cars, but they came into effect so that the cars could run faster, so that when you needed to stop, you could apply the brakes. So this is exactly the the same logic, that when regulations or security measures, like I can tell you from my experience in working in banks, that when you kind of make a product live, the kind of back-end hassle that goes on with the various teams within technology in terms of IT, security, blah, 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 it's humongous. And compliance teams, you are a business guy, you want to quickly launch a product, but hey, look, there's a huge amount of governance that, kind of has to go, completely satisfactorily, so that before you kind of even launch your product in the digital space, in the mobile first space. So there's a lot of practices which institutions which are regulated put into place. And hence, what comes in, if that is quality, then what goes out will obviously be quality. And that's why, from a gating perspective, RBI regulates a set of financial institutions. And with that regulatory oversight and arbitrage, that's precisely the effort, so that the ecosystem subsequently then gets fed with cleaner and safer data.
Anjali, you want to take it?
Yeah, just to add to this, in the digital world, actually a lot of value can be created with collaboration and sharing. This is a certainty. But everybody wants to create a moat that, I am safe, my organization is safe. And in digital world, the only moat that is going to work is going to be a good customer experience and leveraging the data to create intimacy with the customer. How well do I know the customer? If you already have $100 in your account and I'm making you an offer for $100 loan, that's not going to work. I don't know, I have not used your data properly. So these two things are going to be a moat. Yes, I might be sharing 10% of my data, which is 10% of the ecosystem, but I also have the possibility to use 90% of the data that is available from others. So how well can we use it is going to be the real moat in the digital world. It's not about who started first. It's a very, in a very simpler manner, it's a democratization which is going to happen in a much faster manner in the digital world. And DPI is helping us do that. A lot of these things were created in China by private corporations. And therefore, there were companies that they said, they could be $1 trillion valuation company, their IPO would be of $100 billion, etc. We should be thankful that in case of India, the regulatory supervision has been so good that we are creating these things as a public infrastructure so that everybody can use it, everybody has equal rights to use it. There's of course going to be some cost for it, but that's going to be nominal. And that is why we see in India, I would say NPCI is one of our first big tech, which is operating at population scale, is able to do a lot of things, impact lives of so many people. And there will be more big techs coming in because of these DPIs. So we are in a very good times.
Maybe space for just one last question, okay? We'll pause then.
Thank you very much for allowing me asking a question. So, sir, all of you have explained beautifully how it is important to verify the background of the customers before onboarding, be it entity or individual, how cleaning the profile, right? That would help to reduce the risk. So just question is, like, do you feel legal checks to find this, if there is any criminal history or any fraudulent history behind the person or entity is going to help you?
The answer is yes, because if you don't, the bank is at risk. So I think any financial institution, whether it is a startup or whether it is a financial institution, if we don't know you or that institution, the risk is high.
True.
Correct? It's like establishing a relationship. So your initial entry point of a relationship is to understand how I know you and how much do I know you and what is it that…
Absolutely.
And when you give a loan, it is what do you mean by giving you something? What are you worth for? So what really happens is if you don't know you, then it's a risk you're taking.
Right.
When you take your risk, it's always a very small risk that you take. But it's never going to be that you can get away with not knowing you. Simple as that. And you've seen multiple examples where even the regulator has been time and again saying, do not bypass that. And it's for a reason. That's your foundation of your risk practice. After that, how you evolve your risk practice to understand the customer's behavior or the institution's behavior, the transactional monitoring, the overall there are some 20 other parameters that one monitors, is going to be very fundamental to your existence and engagement. Not doing it, yeah, you will have 80-20 impact. And then it's just going to impact the organization trying to lend it. And it's not free money. At the end of the day, it's not free money. As financial institutions, we are custodian of someone's money at the end of the day.
Very true.
So I think that question doesn't apply. If you don't know and you've onboarded, your risk is 100%, is all I will say. It's my thing, you may.
No, I think I completely agree. So know your customers, actually know your customer, it's like it is KYC, not KYD. So KYD stands for know your documents. So sometimes an organization just do know the customer by the documents that one submits, proof of entity, age, whatever, or loan status and stuff like that. So the real challenge is to really know the customer, as in the point like Mahesh mentioned and the question that you are asking, are there legal issues, crime issues, etc., etc. So here again, I would say that DPI is evolving and helping. Today, for example, if you want to do a name search and whether legal cases are pending for corporates or any entity that is wanting to borrow from you, there are APIs available which can quickly pull out. Maybe 10 years back, they were very manual. You have to go to a court and kind of make a fee and then retrieve the document, which would delay the process. So from a DPI perspective, these kind of infrastructure services is only further adding to the know your customer part of the story, for sure.
Thank you so
Okay.
much.
I think we close now. So thank you. I think अगले event से पहले मैं बीच में मिलने आऊँगा. Okay. Thank you guys. And it's not easy. So I'm so happy that they are here and we got this chance to interact with them. Thank you. Thank you.
What a wonderful panel discussion. Thank you so much, Mr. Ramesh Ramamurthy, Mr. Mahesh Ramamurthy, Mr. Kashinath Hariharan, Mr. Anjani Rathore.